Hey everyone, welcome back. Ready to dive into something really interesting today? We're going to be looking at some major moves happening in the global finance world.
Yeah, should be interesting.
It might seem a bit, distant from our everyday lives, but trust me on this one, understanding these global currents can give you a real edge.
Absolutely. It's all about connecting those dots, seeing how even seemingly unrelated events can ripple outward and create these huge impacts across the whole financial system.
And some of the biggest ripples often start with, well, the big players. We're talking about economic powerhouses like, for example, China. They've been making headlines recently with some pretty significant policy changes from their central bank.
Right, they decided to cut interest rates.
Okay, so break that down for us. What does that even mean?
Basically, they're making it cheaper to borrow money. It's all about trying to stimulate the economy, get things moving,
Yeah.
encourage businesses and consumers to spend a little bit more.
Got it. So they're freeing up more money to flow through the system, boosting the economy. But here's where I think it gets really interesting. This isn't just some minor tweak. We're talking about China. This is the world's second largest economy. Their actions don't just stay within their borders.
Exactly. They have this ripple effect. To really understand the scale, think about this. China's GDP is actually larger than the entire economies of the UK, France, and Germany combined.
Oh, okay. That puts things into perspective.
So when they decide to make a move, you better believe investors and economists around the world are watching very, very closely.
It's kind of like they're dropping a pebble in a pond, but in this case, the pebble is more like a boulder, and the pond is, well, the entire global financial system.
Think of it this way. Let's say you're a business owner, right? And suddenly, borrowing money becomes way cheaper. You're probably going to be more likely to invest in your business, maybe even hire more employees. Now, multiply that across thousands, even millions of businesses, and you start to see the potential impact.
That's a great point. So even if you're not an economist, someone who follows the market super closely, these actions, these big economic decisions, they can have a real impact on all of us. But what makes this whole situation even more intriguing, even a bit, I don't know, unnerving? China isn't alone here. It's like central banks around the world are all reading from the same playbook.
Yeah, it is kind of strange, right? Like a coordinated thing. We're seeing this global trend towards lower interest rates. The U.S. Federal Reserve, the European Central Bank, they're all jumping on board.
Which makes me wonder, what does this actually signal for, like, the future of global finance? This whole thing with interest rates, it's got my head spinning a little, to be honest.
Yeah, it's a pretty big deal.
But what I'm really curious about is, like, what does this actually mean for, investments?
That's the real question, isn't it? Because when you've got interest rates going down, traditional investments, think bonds, they suddenly seem a lot less appealing. You know what I mean?
I think so, yeah.
Investors, they're always looking for opportunities, places where their money can really work for them, right? And when those safe, familiar options aren't cutting it, they start looking elsewhere.
So does that mean everyone's going to start buying Bitcoin? Like, is that the big takeaway here?
Well, it's not quite that simple, but you're onto something. To understand why Bitcoin's suddenly back in the spotlight, we need to talk about one of its most important features, its limited supply.
Right. There will only ever be 21 million Bitcoins. I've heard that before.
Exactly. And that inherent scarcity, it's incredibly significant, especially right now in the context of, well, you guessed it, inflation.
Okay, hold on. Explain that one. How does Bitcoin play into this whole inflation thing? We've all been feeling that, right?
Absolutely. See, with regular currencies like dollars, euros, when those central banks start cutting rates and potentially increasing the money supply, it can lead to inflation. That means basically your money doesn't have as much buying power.
Yeah, everything's getting more expensive. It's tough out there.
Exactly. But Bitcoin, on the other hand, because of that fixed supply, operates completely outside of the control of central banks and their policies.
So it's like a safe haven when everything else is going haywire.
A lot of people see it that way. If those traditional currencies start losing value because of inflation, well, Bitcoin's limited supply could actually make it a more appealing store of value. And it's not just individuals who are starting to see this potential.
You're talking about Bhutan, right? That whole thing where a whole country decided to hold a chunk of their national reserves in Bitcoin? That's wild.
It's a pretty big deal. It speaks to a much larger trend. Governments, huge corporations, even, regular folks, they're all starting to look at Bitcoin differently. It's all about diversifying their assets, finding a way to navigate this really uncertain economic landscape.
And speaking of big players, we got to talk about these institutional investors. I mean, this isn't just someone throwing a 20 on a meme coin. We're talking about major financial institutions putting serious money into Bitcoin. It's like Bitcoin's having a bit of a moment, right?
It really is. And these institutional investors, they're not just dipping their toes in the water anymore. They're diving in head first. Hedge funds, these huge asset management firms, even pension funds, they're all getting in on the action.
Yeah, you mentioned pension funds. I mean, these aren't exactly known for being, risk takers. What's got them so interested in Bitcoin?
Well, for one, it's about diversification. They have to think long term, right? And Bitcoin, it's still new, it's volatile, but it also has this incredible potential for growth it's really hard to ignore.
And it's not just about potential profits either, right? I feel like having these big institutions involved, it kind of legitimizes Bitcoin in a way. It's not this fringe Wild West asset anymore.
Exactly. Institutional money, it brings a certain level of regulation, more scrutiny and stability, things that just weren't there before.
Right. It's like a stamp of approval. So, okay, let's bring it all home. We've got China shaking things up, global interest rates going down, these big-time investors taking Bitcoin seriously. Heck, we've even got countries like Bhutan putting their money where their mouth is. It's a lot. What does this all actually mean for, the average person?
It's like we're watching this huge shift happening in finance right in front of our eyes. It's not about running out and putting all your savings into Bitcoin tomorrow, but it does show just how important it is to stay informed, to be aware of these big trends that could have these ripple effects across the entire global economy.
Yeah, it's not about becoming a day trader overnight or anything, but maybe it's time to start paying a little more attention, right?
Absolutely. The world's changing fast, and the financial landscape is changing right along with it. Even understanding these forces at a basic level can help you make smarter decisions about your own money.
Knowledge is power. Right. So, look, if anything from our deep dive today has piqued your interest, don't stop here. Read some articles, have conversations, and stay curious about the world of finance.
Because things are changing every single day. And the more you understand the forces at play, the better equipped you'll be to navigate whatever comes next.
Couldn't have said it better myself. Thanks for breaking it all down for us. That's all the time we have for today, but as always, keep those brains buzzing, and we'll catch you next time.